Okay, let's do it. Hello, everybody. Welcome to today's live stream. We finally have the sidebar in for actually having trading view streams show up for people. So that means I want to actually try now. Goodness. So we are going to be doing advanced volatility theory here. In addition to well, pretty much just that. Pretty much we're only going to be using Wave PM, 3D Wave PM, our Bollinger Bands, and CCI. Pretty much everything on this chart is simply a derivative of a Bollinger Band, which makes things fascinating, right? CCI is just a mean absolute deviation representation of a Bollinger Band. Wave PM is essentially just how compressed or enlarged a Bollinger Band is. So say here you have high potential energy, meaning that when you break out and you have, goodness, positively weighted CCI, what happens? You begin trend, like so, here. We've talked about this plenty in the past, but as we have plenty of new people watching today, I just thought I would give a quick little refresher for you guys. So, let's dive into it. I'm actually going to start with our Discord users. They do get priority on which charts I check first. All right. First up is Link. Link BTC. So on the daily chart, it's been this way for like I think 4 or 5 months. Link is in macro level compression, which means it's returning to a state of potential energy. And essentially what that means is because we have seen such a significant trend for such a long period of time, like here, we are now entering, or rather on the 1st of November, we entered our mean reversion condition right here, which means we needed to go down to this mean. Lo and behold, that's exactly what we did. All right, so that was a 40% move to the downside. And it's pretty much something we've just been expecting this entire time. All right. Downward sustainable trend. Beautiful. Mwah, love it. All right. That's Link. Link is in a downward trend. We can actually define this trend based on the 4-hour chart. Your mean reversion pivot is currently at 61286, meaning as long as we are below this pivot here, we will stay in a downward trend. Okay? That's it. That's the entirety of Link. Yes, that pivot is very, very far away. That is how strong this downward trend is. Right? We would actually have to go up over 30% for Link to no longer be in a downward trend. That's just the way it is. Okay. What's next? Lo and behold, we are going to check out XRP BTC. Goodness gracious! I am very happy with our XRP short. I'm going to pull that up because I can. XRP short call. Beautiful. Let's just hit the play button. Goodness gracious, we had our target at 1808, and lo and behold, we have hit that target. Damn, 928, Jesus. I have a trailing stop that actually triggered around here at 1400, so I am out of this position. But it was a very fun ride. So, goodness, XRP, check it out. XRP BTC, this is an active downtrend. Can we even define this? No. Okay, so we have a rather interesting situation here where because we had initial upward expansion, we generated a bullish mean reversion condition. And because we instantly blasted through that with the strength of this downtrend, we no longer have a reference for the proper amount of volatility in order to define a bullish mean reversion pivot, right? Because this indicator has a look back of 100 candles to define what volatility is, right? How volatile is this pair? So when you generate a bullish mean reversion condition, you can no longer generate a bearish one as long as it's in the previous 100 candles, and that longest period has not seen sufficient compression to resume. So I actually have a very hard time doing TI on this at the moment. Pretty much the only thing we had going for us was the activation of this bearish mean reversion condition here, We entered here on the swing high, and we saw our mean inversion. Had a little bounce off the mean, and now downtrend. Beautiful stuff. What's next? Ethereum. Goodness. I'm actually not up to date on Ethereum. Let's check it out. Okay, daily is implied compression, but it's already tapered off, so sufficient potential energy. 4 hour, daily. Yeah, daily implies new downtrend. Let's see, 4 hour here. Okay. So one of my favorite signals is the tag of the 3.2 standard deviation of the longest overexpanded period, which is essentially just this little red period here. Okay. This band automatically generates on whatever this reading is. So it's 3.2 standard deviation, in which this case is the 300 period, 3.2 standard deviation on a Bollinger Band. Every time you tag it, you see immediate rejection, just every time. It is very, very accurate, and it can even be used on the most liquid pair on Earth, the ES1, S&P 500 futures, to great effect. It is a rather rarer signal on more liquid pairs, but crypto doesn't care about that because it's wonderfully volatile. And we are actually seeing the start of a mean inversion condition here. So if you want to enter on Ethereum, what you are going to do is, because this is the 300 period, you're going to want to load up a CCI, okay? And you're going to want to change a length to 30. All right. This 30 length, which is going to be length to, actually, let's do 100. And just set this to 0. It didn't like that because it doesn't like 0 values. Oh, it did. Okay, we're good. So essentially, what we are looking for here is we want this to roll up above the 100 value. That will be your long signal, okay? Beautiful. Is that me lagging or you? I don't know. 30 FPS, 0 drop frames, 6,000 kilobits per second. Yeah, that's the max I can upload. I have a gigabit internet, but TradingView currently has limitations on that. So, let's get into it. Let's check out BA, because I actually like that pair. Boeing. Goodness gracious. Do we have active bullish mean inversion? I don't know. So, this was such a volatile move to the downside, we actually can't really accurately define the mean inversion pivot on the daily. We have to go to a higher time frame. So let's try the weekly. Yeah, okay, so this was such a volatile move that on the weekly chart, with our previously defined volatility in the last 100 bars, it's maxed out above 600. So then we would have to like go to the monthly chart, and then you just no longer have relevant information. So I guess what we can do is look at the micro, and I can give you guidance from there. Because if we actually do zoom on this 4 hour here, we actually do have a very, very clean mean inversion condition, right? This is a solid red plume. It's very clear. It's defined at the 200 period, so this is the 200 1.25 standard deviation. All right. We are currently bouncing off that pivot. All right. You can actually buy like right now. It would be a good buy. Because this pivot here is very reliable. And if we sink through, you can just immediately stop out, because that implies mean inversion and compression. So you want to look for a bounce to the upside right now, essentially. Or at least when the market opens tomorrow. Dang, what are all these colors? I know what you mean, man. Colors in the background, I mean, those are my smart lights, but you probably aren't asking about those. This is a volatility heat map. This is probably what you're asking about. So wave PM, this indicator, all right, is pretty much just how compressed a Bollinger Band is. All right, so this blue one here is the 100 period. If on the previous 100 candles we are now less volatile, this indicator will go down, right? If we are more volatile, the indicator will go up. So another way to think about this is down here you have high potential energy for that period, and up here you have low potential energy for that period, right? If you are exhausted, you are going to go sideways. If you have potential energy, whichever way it breaks out, you're going to get trend. So did we trend right here? Briefly. We saw a move that was 15% to the downside. That is a solid move for compression. Right? And that's just in tandem with whichever way the CCI is weighted. Right? So 3D Wave PM essentially just turns that information into a heat map. Right? You have your big red plume here. In which case, it's actually the same color scheme, where you have blue values down here, which is compression. And say for the 14 period, you have blue, that means the 14 period is compressed. If it is red, that means it is overexpanded. You have low potential energy. So essentially, this heat map, if you take the highest period that has low potential energy, and you use that as a pivot, which this band here automatically defines, which is currently the 200 period, you can use that pivot as trend or not trend, right? Because if you enter compression, then you will compress until it is no longer in a state of overexpansion or exhaustion. Essentially, what we are doing here is using the 1.25 standard deviation as the pivot, because that is the pivot point, or rather the empirical constant for the expansion or compression of any distributional period. In other words, if you have a bell curve like so, beautiful bell curve, it's 100% accurate. That is 0. This is your first standard deviation, right? Let's say this is the 1.25, all right? If you have data outside the 1.25 standard deviation, the entire band or the entire set of data is going to be in a set of expansion, right? It's going to get wider. And if you have data inside the 1.25 standard deviation, the bell curve is going to get thinner, all right? And that's the information we're using. So if it's exhausted and it's compressing, that means very likely you're going to stay inside the 1.25 standard deviation of that period until it has returned to a state of compression or below the 0.7 value on the wave PM, right? So this purple band here, or this purple line, is the 200 period, which is just a happenstance what the longest overexpanded period is on the 3D wave PM. So when this period here returns below 0.7, and let's say if price was actually inside this band, price would trade laterally inside this band until we actually cross below that pivot. And this happens around with 95% accuracy. Just the problem is making money on that information is if you have lateral compression, how do you define the swing low and the swing high? I mean, you can do it, and that's exactly what we did on XRP. But we got very lucky with the swing high because of how clearly defined it was. So you can actually use it as a trend pivot, which is what we're doing here. We're just buying long. LOL, trading doesn't have to be this difficult. No. It doesn't. It really, really doesn't. But it can be this complicated. I'm extremely new. I just started today. I guess I can give you my words of wisdom, my catch-all to new people. Do not use an indicator or a strategy if you do not know how it works. That's it. That's all you need to know. Do not use RSI if you do not know how it works. The fundamental driving paradigm. All right. I just explained the fundamental driving paradigm of a Bollinger Band, right? The expansion and compression is the relevant information, not the standard deviations themselves. What you care about, that you can use whatever you want, just understand how it works before you use it. That's all I'm saying. There are tools better than other tools. This is my personal favorite. Just know how it works. That's all you have to do. I think I also have a conspiracy theory about Fibonacci. I feel like Fibonacci was introduced to retail traders by institutional traders as a way to make them predictable. Right, think about it. It's the first thing people come across. It's the first thing people try to learn to use. You have all these people using arbitrary Fibonacci values. Um, a bunch of people trading the same information that doesn't really have any relevant take on the market, right? It's very, very arbitrary. And what happens is people, they'll become predictable to the people who know what they're looking at. And if you have a whole swath of predictable traders, you get a predictable market, and a predictable market is a profitable market. So it is in the interest of institutions to feed you bullshit, essentially. Just know what you're doing. Fibs or BS? Yes, very good. Contentious point, I know, but if you actually do want to know why they work, it's because the Fibonacci value is very similar to the first standard deviation of any major move. I love this song, by the way. This is a great album. Wow, how can you trade with all that on the chart? That would drive me crazy. Trust me, man, I have been driven crazy by using this stuff for a very, very long time. All right. What's next, my boys? Take the baby pips course, okay? It's really important for risk management. That's what I recommend if you're brand new. Once you get through the baby pips course, just completely ignore everything they say about indicators and do your own research. Essentially, find an indicator you like, find out who coded the indicator, and then read the books by that person. That's all you have to do. There's a very good book called Bollinger on Bollinger Bands, for instance. It's about Bollinger Bands. And it's written by the guy who made Bollinger Bands. So, excellent read. Just find the person who made the indicator you want to use and learn how to use it from that person. That's the secret to trading. Oh, and use a stop loss. That's the other thing. All right, back to analysis. H-bar. I don't know what that is. Hedera. Haven't heard that before. I guess I'll add it to my Binance watch list. Hey, look at that. You know what we're seeing? Rejections from the 3.2 standard deviation of the longest overexpanded period. Wow. We just talked about that. You have a trend pivot at 150. You need to go up about, I think, 12%. Wow, 22%, sorry. In order to return to a state of neutral or bullish compression. So, bearish. No. Bad. S and X, okay. Also, feel free to join my Discord channel. The link is below the video. You can, if you want to watch these videos in the future, you can actually preemptively request your charts, and I'll look at them first. Also, I always recommend looking at the Bitcoin pairing of a chart over the USD pairing, and then just using the correlation coefficient indicator, which essentially just says, hey, how similar is this to Bitcoin? Is it doing the same as Bitcoin, which is a positive value, or is it doing the opposite of Bitcoin, which is a negative value? And that can just save you a lot of time instead of looking at the USD pairing. Just look at the Bitcoin pairing. So if you have something largely independent of Bitcoin, that's actually good. But if you have something that goes down every time the Bitcoin goes up, in other words, like one-to-one negative correlation, you probably don't want to trade it. But this looks good, actually. It's very neutral. But you're also in a state of bearish compression at the moment. Yeah. So we had this mean aversion, and now it's compressionary noise. So I don't really have a predictor on direction just yet. I would actually say you're more likely to go down right now than up. I'm going to guess that's going to happen. Beautiful. What's the album you're listening to? Disappear Here by Hybrid. Do you ever take live trades on here? Yes, I do. One thing I'll do is I'll load up multi-charts on the left half of my screen, and I will load up Teamfight Tactics or Terraria on the other side of my screen. And I'll just play video games while I wait for my trade to open. If that sounds fun, give me a follow. Like, a lot of people who live trade are just really boring about it. They'll just, like, stare at a chart for 30 minutes, like, okay, I'm going to enter now. What are we seeing here? Is this review or live scalping or something? This is just analysis right now. You give me a chart, and I analyze it. And I tell you if you want to buy it or not. Or sell it. That's it. What's next? STA. You did not give me the exchange, so I cannot look at it. Because otherwise I don't want to look at the wrong thing. Okay. What's next, eh? GBP keeps climbing. Yeah. I am not up to date on the fundamentals of the British pound. I will admit that right now. But we can take a look at it from the TA standpoint. GBP USD. Oh, I super duper recommend shorting this on, like, the weekly chart. The Ukrainian hryvnia. I don't know how to pronounce it. I don't care. But it's a really good short right now, okay? Or, excuse me, it's the other way around. It's USD UAH. That's the one you want to short. Yeah, this compressionary band has been so ridiculously well respected. And we're at the swing high right now. So just short it. And the profit ratio is just ridiculous. You have a 20% downside and like a 2% upside. Really good short. That's what I recommend. It's also going to take like 2 years. So just make sure you're on a futures contract that lasts forever. What's next? Yeah, GBP USD. Okay. GBP USD. Okay, we are in, or rather we have just finished a state of neutral compression, right? We activated it. Also, I'm going to change the color of this because it was blue because I was using the light theme, but now we're not. So this is now pink. Yeah, that's even worse. I don't know what I'm thinking. We're going to do yellow. Actually, this is a good color. Okay. So, neutral compression on the weekly, excuse me. Daily chart, you have no implied direction because this is a slow rolling trend, so you aren't generating overexpansion. Because the previous 100 candles has now defined volatility as what volatility currently is, right? You want changes in volatility to actually be able to define mean reversion pivots. And at the moment, this is just such a slow rolling trend that we can't do it. So I guess you would have better luck just defining like a pitchfork in this scenario. Pitchforks are actually usable. I do recommend them. Just make sure you're using them properly. Take the swing low, touch the swing high, and then you touch the swing low. That's it. You can also do this swing low. How does that work? Beautiful. And just make sure you use a buffer range on the edges of it. So I guess you have a trend, but it's so volatile on the swing high and swing low that you can't really take advantage of it, in my opinion. Trend line, yeah. Actually, that's a perfect touch there. If you ever use a trend line, just make sure it has 3 points of contact, okay? I don't recommend trend lines, but I guess it's okay. I personally would not trade this. Okay. Dark blue, please. Okay, I'll do light blue. I'll settle in the middle. Yeah, I haven't looked at Bitcoin yet. You can do that. Okay, so Bitcoin, daily chart. What we care about is this line I drew over here. Oh, I'm sorry, weekly chart. So we actually had an unprecedented signal that I've never seen before, like on any chart ever. Like it was that good. On the weekly, we had every value below the 0.4 value, which I have just never seen. It's never happened on a weekly chart, which implies massive potential energy. Okay, and then on the daily chart, excuse me, 4-hour chart, we had massive compression on the 4-hour as well. So as soon as we had the positive break here, on this candle, right, we had every period in tandem going upward, while every period on the CCI was positively weighted. That meant that trend was beginning. And lo and behold, we have had nothing but trend. Just from looking at this, we've seen one 3.2 standard deviation tag, and it's gone sideways since then. I'm going to guess we're going to go sideways now. Okay. Bull flag. That is my guess. Can we define that on the 15-minute chart? I think we can. Okay. Mild bearish implications. This compressionary period's finished, right? The longest overexpanded period is clean, below 0.7. So you actually have very little implied direction, other than the fact that you have this potential energy here, and it's bearishly weighted on the CCI. So I would not be surprised if we had a tapering downward trend like this. But downward and sideways is my current bet. Can you answer me, please? I made a lesson like 3 years ago. It's in the signature beneath this video. You can watch that. Also, take the Bitcoin. I'm sorry. Baby pip scores. Take the baby pip scores. Do that. Could you re-say it, please? Baby pips. How you do it? Baby pips. It's for the professionals. All professionals have taken the baby pip scores. Guarantee it. Ooh. Okay. Do you have any resources to suggest? Oh, I just answered that. Yep. I will admit this is not exactly a beginner's-friendly stream. What are your indicators, please? Bollinger Bands, obviously. Fantastic live stream as always. It is my pleasure, my man. I love it. Good times. Yo, TradingView. Am I allowed to like stream myself playing Terraria while I live trade? That's cool, right? I got a wide enough screen. We got like to use half of it here for Terraria and half of it here for TradingView. It's gonna be perfect. Okay, what are my indicators? We can do that one more time. Oh, thank you, TradingView. You're my biggest fan. All right, so this is essentially everything on this chart is just a Bollinger Band, except a different representation of it. All right. This is CCI, mean absolute deviation representation of a Bollinger Band. All right. This is wave PM. It pretty much just says how wide a band is, or how compressed it is, or in other words, potential energy or exhaustion. Finally, 3D wave PM is a heat map of the previous indicator. That's it. And then this Bollinger Band thing here The way this works is it automatically defines mean reversion pivots. If you go inside, you touch the blue line. That's it. It'll automatically generate on any chart, and then it works like 90% of the time. So it's, I don't know. Dash. Let's do it. 1 hour chart. Oh, goodness. This is rather interesting. So, in this scenario, you actually have a phenomenon called volatility overhead, where you have a previous expansion that re-expands due to a current move, and it actually generates false stands. So, in this scenario, we'd have to manually define the mean inversion pivot, which would be the 80 period 1.25 standard deviation. Right, so just 80, uncheck, beautiful. Okay, so we enter the 80 period band here. It implies we need to touch the purple line before this value goes below 0.7 or green. Lo and behold, in one candle, whoop, touch that line. Beautiful. That's it. Let's also do ES1 because pretty good way to do this. Why is the quality bad? At the moment, there's a limit to how many kilobits per second I can upload, which is 60 or 6,000, excuse me. But that limit should be released pretty soon, and then I'll be able to go up to 36,000 kilobits per second. So soon enough, we will be there. We'll do it. Okay, I should actually answer your questions. How's that sound? What is the safest thing to trade and the riskiest? Safest thing to trade is going to be buying just your major indices and holding them for 10 years. That's it. I kid you not. So the reason why it's so safe to buy major indices is actually pretty clever. And a lot of people, for some reason, don't know this information. On your major indices, when a stock performs poorly, it just gets removed from the index and replaced with a winner, right? So if you have, for instance, GM, and they go bankrupt, they'll get removed from the index, and they'll be replaced with the winning stock. In other words, the thing that was tanking this index will now be replaced with the winner, and then it keeps going up. It's kind of ridiculous. That's why it's so safe to buy stocks. Because they'll always replace the losers with the winners. Just don't choose individual stocks, just buy the index. That's it. So, buy the index, hold it for 10 years, and you're good. You could have bought, this is just ridiculous. And never buy an annuity. That's the other thing. So, what you can do is you could buy right before the major crash at the exact top in 2008. Or the exact top. You could buy that. If you wait 5 years, you're in profit. In fact, you would have made more profit than if you had an annuity during the same period of time. And the reason they sell you annuities is it's so safe, you can't lose any money. But the returns are just so bad. Just buy an index and hold it forever. That is the safest way you can possibly trade. Sometimes I'll actually do a restream to my YouTube channel in the 3600. But since I just spent all this time setting up Streamlabs to do what I want it to, I didn't do that today. So soon, or maybe next time, I'll do the double stream, okay? Okay. Get your questions in. What tickers you guys want me to look at, eh? Do you leverage trade? I mean, futures are inherently leveraged, right? You buy a futures contract and it's worth one of itself. Like, it's the exact value. But you lose money due to inflation when SPX does nothing for 5 years. Sure. What's your alternative, though, in a bear market? I mean, dated long puts maybe, but you need to be really, really knowledgeable about that. Pete, the S&P bearish divergence on the daily. With what indicator? I'm guessing RSI. So I'm not one to actually be all too enthused with divergence. Simply because divergence is actually a derivative of the expansion and compression of whatever distribution the indicator is working on. And by distribution, I mean bell curve, right? So if you have a really tight bell curve, like this, okay, around price, and then it suddenly expands because you have a large move, right? You have a larger data set, right? New moves are actually going to be less effective on the indicator, right? So in RSI, you have a major move over here where your distribution is thin, where you have a confined set of data points. It's going to spike outside, okay? Your indicator is going to give you a really exaggerated value. But now that volatility is being included in your data set, let's say you had the exact same move, the exact same percentile move, you would actually get a lower reading on your indicator, a less drastic movement on your indicator. And that's because, what's it called? I lost my train of thought. Because you have a larger set of data, the same move no longer seems as big to the indicator, and that's what creates bearish divergence, right? Because initially you'll have a large spike, and then even if you get the same move, it'll register as a smaller spike, simply because you have a larger data set or a wider data set. Data set size stays the same. Where are you from? Colorado. Ah, shit, I forgot. I haven't checked any of the YouTube comments, but... oh well. Could you please do gold, silver, or copper? Yeah, that sounds fun. With what indicators? Oh boy! Okay, futures are inherently leveraged, right? Because if you put in a value larger than your account, that is inherently leverage. Right? Let's say I have an account of $1,000 and I buy a contract worth $27,000. I'm on 27x leverage. Why so many indicators? Actually, it's just one indicator. This is all just Bollinger Bands, but each one is a different representation of a Bollinger Band. So it's one indicator, but it is just a very widespread or comprehensive reading of that indicator. Can you do gold? Yeah, I'll do gold. I'd say gold is about as close as you're going to get to a manipulated asset class in traditional assets. Simply because of just the paper liquidity of it. Oh, interesting. Gold, you actually have sufficient potential energy to break out here. So if we do see a significant move to the upside here, it would be trend continuation. Right? So down here, all your Bollinger Bands are compressed. Beautiful. That's high potential energy. If, say, CCI weights itself to the upside, that's bullish trend. If it weights itself to the downside, that's bearish trend. That's it. That's all we're looking for. Clean and simple. Leverage trading is great. You just need to follow trends. I mean, yeah. This is a trend-defining pivot. That's it. Yeah, it's also important not to really have any loyalty to a specific pair. Like, some people try to trade in the same choppy waters over and over again, but you can just, you know, trade the pairs that are actually performing well. If I may ask, based on your experience, what percentage could you say your predictions are correct? That's a good question. Probably like 55%. But that's only because being correct is direction dependent, right? The indicator can be 90% accurate based on a pivot, right? So like, let's just say you have a pivot and you say, oh, as long as price is above the pivot, it will go up. And then it doesn't. All right, and you had a long here. You are technically correct, and now the trend is down, but you did not get a short entry. You got a long entry, and you got stopped out of that long entry. So the win rate's pretty average, but the indicators are very, very high accuracy. Right? So essentially, it's just experience and spreading your positions effectively. And sometimes I'll just like do 10-to-1 profit ratios for an entire week, and I'll lose like all of them. But that one time I do hit the winning trade, it makes back the entire set of losses and more, which is usually what I do. Like XRP is what I did recently. Like on the 4-hour here, right here. Oh, look, we broke our trend pivot. It's gonna go down. So we shorted here. And lo and behold, I had a trailing stop that took me out here. So, easy and clean, right? Whereas if this goes up, boom, that's a losing trade. I stop out right there. But, you know, cool. Trading is largely about volume, how many trades you can place. And you only place good trades. Like, I'll look at 200 charts in a day and I'll maybe be interested in 3 of them. Indicators give you a sense of soon to come price action. Yep. What do you mean spreading positions? It's essentially just like putting a short here, 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 and here, with take profit here, 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 and here, right? Yeah, you can put clouds, essentially, so that way you're less likely to, you know, have a very binary experience, if that makes sense. Like, a lot of people just like, oh, I either win or I lose. No, you can make clouds of positions and use those, and then it softens the binary nature of trading. Trying out price action, is it viable to continue or switch to indicators, or rather use both? Pretty much my only recommendation is, ooh. So pretty much my only recommendation on using price action indicators is ask yourself the question, what is the fundamental paradigm driving the efficacy of this strategy? That's it. As long as you can answer that question accurately and in depth, then you can use the indicator or whatever you want to use. But if your answer is, it's a proven standard, everyone else uses it, or it's worked in the past, it will work again, then you definitely don't want to use it. How can I do this? With your fingers. I don't know what you mean. I jumped in a few minutes ago. I tried to research the Wyckoff method. No idea if you use it or have used it. It's a pretty important thing to understand. Not necessarily from a strategy aspect, but from psychology aspect. Because the actual structures are not too relevant anymore. I mean, the information is almost a century old. But the principles of the manipulation that occurs is very useful. So like, you can apply Wyckoff strategy to like trend lines, or Wyckoff psychology, excuse me. Like read Wyckoff for the psychology, not for the technical aspects. While definitions and such are fairly straightforward, marking, for instance, the preliminary support on a chart still seems a bit, for me, more of an art than a science, but I'm probably wrong. Actually, we've gotten preliminary support to be pretty accurate, but only in the sense that it's a very binary decision, right? So this here, this pivot is preliminary support. You can take a long on it, but if you break it, you're now in downtrend. Okay, so when I say it's binary, what I mean is it can be accurate, but as soon as it actually commits, you're no longer going to be able to get a safe entry, right? So this pivot, if you're below, you downtrend. If you're above, you go to the pink line, or blue line, excuse me, right? So like here, okay? Right, you have your initial impulse, you touch down on your pivot, beautiful. You bounce off, you get your profit, excellent. So now you try it again. You bounce off here and you stop out. All right, the information is accurate. The only problem is you have to choose one or the other. You don't get to have both. It's beautiful. Like you enter the pink band, you go to the blue line, and you will not leave the pink band until you go to the blue line. Ooh, mwah. Beautiful. So yeah, you can science it out. It's just very binary. Why are you looking at XRP, buying the dip? No, it just it's something I traded recently and I was using it to explain things. Is it XRP? Yeah, I made sure that I have this really nice big watermark in the middle of the screen because I am covering this information over here. Thanks for the feedback. Okay. Favorite time frames? Depends on the chart. Like if I'm trading S&P 500 futures, I'm gonna do the 5-minute and 3-minute. Bitcoin and altcoins is 4-hour to daily. Sometimes 15-minute. So what's interesting about this strategy is it transcends time frames, which I know sounds really pretentious, but just bear with me. All right. So this reading here, okay, it is 250, right? This red plume goes up to the 250 period. All right. Guess what happens when I go to the 8-hour chart? It now goes up to the 125 period. What is 125 times 2? 250. Right? This pivot stays exactly the same. Because I'm not caring about the time frame, I'm caring about the overexpansion. So no matter what time frame I'm on, this is going to give me accurate information. Which is just unprecedented in indicators, essentially. I can go to any time frame and the information is going to stay the same through the time frames. If you're interested in these indicators, we have like 4 hours of instructional content on how to use them on my YouTube channel below. Just take a look at the playlists. All right, what else you guys want to look at? I just explained that. It's binary, right? So this is a pivot. I can take a long on the pivot and I make my profit. I can also take a long on the pivot here because it's doing the exact same thing. Except this time it goes down and I stop out. Right? It's binary. Either it is or it isn't. And just because it's accurate, it doesn't mean you're on the right side. So wait, are BBs used to calculate the energy or what? Not traditionally, no. They're essentially just bell curves. And the standard deviations are important. I recommend watching the introduction video I made a while ago. It's in the link below. If trend is going down, find the pullback and get in. Yeah, sure. Okay, you can do that. That's what we did here. Right? We tried the long here. We didn't make any profit. So what happens? We short here on the rejection and we make our profit. Right? That's 50% win rate right there. You took a long here and you didn't win, and you took a short here and you did win. I just explained what's so hard. You can't take longs on the upside and shorts on the downside at the exact same time. Okay, it's not a trend, it's a pivot. It either is in a state of expansion or compression, and we can make trades based on whether or not it will continue expanding or compressing. So as long as you're in expansion, you take longs, but you do not know when expansion ends. You know how expansion ends, it's by crossing this pivot. All right, so you take longs as long as it's outside, and you take shorts as long as it's inside. Problem is, you don't know when the pivot's going to be crossed. Yeah, dude, I'm a fucking music major way back when. So, pattern recognition, that's what I excel at. XRP has already abandoned it, yeah, pretty much. Oh shit, it got removed from Coinbase? I didn't even know that. That's ridiculous. Why don't I know what's going to happen before it happens? I don't know, man. I don't know. But did Saikai break all-time low? It did. That's kind of cool. Well, I guess, you know, there's a bunch of stuff over here that we've never seen. Because it's just not on the ticker. All right, get your questions in, folks. It's been a pleasure as always. Where's my phone? That's what I want to know. I don't know. I don't know where my phone is. Check out Litecoin. Okay. Here in the weekly, you just have inverse correlation, like all the way through. It is rotating up, though. So that's interesting. Daily chart. Yeah, so this is what we call tapered trend, where, you know, you activate the mean inversion and you complete it and it compresses, and you begin another trend and you mean invert and it compresses, where you just don't have pivots. So I can't really trade it. Okay, with Heiken-Ashi, you're just going to have a super smooth chart. Yeah, if it works, it works. Like, when you have Heiken-Ashi active, you just get that really smooth result, and you don't have, you know, reference of where the entries and exits are. So sure, you can see the rollovers, but, you know, price has already moved significantly other direction by the time the Heiken-Ashi actually registers. What about TWT? I don't know what that is. Twitter. Not Twitter. What are you looking for here, bro? Hey, Shark, nice haircut. Yeah. Pretty much. I don't know. I wore a mask all the time, and I didn't know I had a mustache anymore because nobody saw it. But I just shaved everything. It's worth it. How's TRX looking? Now, let's take a look. Bad. That is a downtrend. Trust Wallet token. I don't even know that's listed, dude. It's not a Bitcoin pairing. Is it a USDT pairing? It's not. Yeah, I can't look at that. The Graph token. Okay. It's on Coinbase. I guess everything's on Coinbase these days. So we don't exactly have a lot of history here. Is it on Poloniex? Not. Yeah, I don't know, man. But this little blip here actually implies down. That expansion there. I actually think it's going to break support right now, to be honest. Thank you for your time and consideration. It's my pleasure. I will copy and paste that to my cat who makes the indicators. All right, folks, I think that's going to be it for today. It's been a pleasure. I'll talk to you all Wednesday at 2:30 p.m. MST. All right? Mwah, mwah. I should not have done that. I didn't like doing that. Goodbye, friends. It has been a pleasure.